Hello, and welcome to Money Talks, Finance for All, the podcast where we break down timeless financial wisdom to help you grow and protect your wealth. I'm Alex, and today, we're diving into one of the most celebrated investment books of all time, The Intelligent Investor by Benjamin Graham. Often referred to as the father of value investing, Benjamin Graham's teachings have shaped generations of investors, including Warren Buffett, who famously called this book the best investment book ever written. Whether you're just starting your investment journey or you're a seasoned pro, this episode is packed with actionable insights. Let's get started. Segment 1. Overview of The Intelligent Investor. First, let's set the stage. Published in 1949, The Intelligent Investor is all about disciplined, rational investing. Graham's philosophy is rooted in protecting your capital while seeking reasonable returns. He emphasizes that true investing is distinct from speculation, and that success requires a thoughtful, long-term approach. In this episode, we'll explore Graham's key principles, his famous strategies like value investing and the margin of safety, and how these lessons remain relevant in today's financial landscape. Segment 2. Core Principles of the Intelligent Investor. Let's break down the core principles that make this book a classic. A. Value investing. Graham's primary strategy is value investing, buying stocks for less than their intrinsic value. Think of it like finding a $100 bill on sale for $70. But how do you determine that value? By analyzing a company's fundamentals, its earnings, dividends, and overall financial health. The margin of safety. This is one of Graham's most famous ideas. The margin of safety means buying investments at a price well below their intrinsic value to protect yourself from errors in judgment or unforeseen market downturns. Think of it as having a cushion to soften any potential fall. Investing versus speculation. Graham makes a clear distinction here. Investing is about thorough analysis, safety of principal, and reasonable returns. Speculation, on the other hand, is essentially gambling on short-term price movements. If you want to speculate, Graham advises keeping it as a small, separate part of your portfolio. Mr. Market. One of my favorite metaphors in the book is Mr. Market. Imagine the stock market as a person who offers you prices every day. Some days, he's optimistic and offers sky-high prices. Other days, he's pessimistic and offers bargain deals. Graham says, don't follow Mr. Market's moods. Use his irrationality to your advantage. Segment 3. Lessons for today's investors. So, how can you apply Graham's wisdom today? 1. Think long-term. Avoid chasing trends or reacting to short-term market swings. Instead, focus on building wealth steadily over time. 2. Do your homework. Research is non-negotiable. Before you invest, understand a company's fundamentals and what makes it a good value. 3. Diversify. Don't put all your eggs in one basket. Graham suggests a mix of stocks and bonds, especially for defensive investors who prefer a hands-off approach. 4. Be skeptical of hype. With today's meme stocks and cryptocurrency buzz, Graham's warnings about speculation are more relevant than ever. Always ask, is this an investment or a gamble? 5. Stick to a margin of safety. Whether you're buying stocks, real estate, or any other asset, ensure you're not overpaying. That safety net can make all the difference during volatile times. Segment 4. Relevance in modern markets. Host. Now, you might be thinking, does all of this still apply in today's fast-paced financial world? Absolutely. The financial landscape has evolved since Graham's time, with new asset classes like ETFs and cryptocurrencies. But his principles are timeless. The idea of focusing on value, managing risk, and avoiding emotional decisions is just as relevant today as it was 70 years ago. Even in an era of high-frequency trading and meme stock mania, Graham's lessons remind us to stay grounded, disciplined, and focused on the long game. So, there you have it, a crash course on the intelligent investor. Benjamin Graham's teachings aren't about getting rich quick. They're about building lasting wealth through patience, research, and sound decision-making. Whether you're a novice investor or a seasoned veteran, these principles can serve as your financial North Star. Thanks for tuning in to Money Talks, Finance for All. If you found this episode valuable, don't forget to subscribe and share it with a friend who's on their own investing journey. And if you have a favorite takeaway from The Intelligent Investor, I'd love to read it in the comments section. Until next time, stay smart, stay disciplined, and happy investing.